Hello again, everyone. This is Joe Hentges with Beyond the Chart, your source for exceptional video analysis of stocks, ETFs, and indices so you can become a better trader. Welcome back. This is the weekend market wrap. Today is Sunday, October 11th, and I'm going to take a look just at the Russell 2000 on a daily and weekly basis, look at one of our key indicators and three key ETFs, US Oil, GLD, and IBB. All right, let's start off here with the Russell 2000. Here's the daily chart. So we've had this big rally back. The moving averages I use, the 10 EMA exponential for my trigger line, the 21, 55, and 233 simple moving averages. I use Fibonacci numbers, 21, 55, and 233. And so right now you can see we have a pretty strongly trending downtrend here with the 55 at about a 45-degree angle down. The moving averages are aligned to the downside, 21 below the 55, below the 233. We've gotten this pullback now right up into this zone. Well, what percentage pullback have we experienced on the Russell 2000? And you got to say it's a pullback because the trend is down. Lower lows, lower highs. And right now, it's probably about 78.6. Let me just for grins, I haven't done this. Let me type this in and see if that's pretty close. Yep, right on the button. Now this is typically the next threshold point I'm looking for once it gets beyond 61.8. And so we've pulled back. We're right at the moving average. We've got very compressed day. Now, when we look at, let me go ahead and get rid of this. When you look at this day, this is the most compressed trading since right back here, right this day. When I went back and scanned through, I did not see a day that was more compressed than what we experienced on Friday. We started to get it on Thursday. I noticed this in all the indices on Thursday until the Fed minutes came out at 1 o'clock Central Time. And at that point, then the compression kind of, it went away. It expanded a little bit. The day's trading range expanded. It's almost like the market was trying to do it on Thursday, didn't do it, and then did it on Friday. Let's take a look at the weekly chart. The weekly chart, you can see we're in this downtrend. Yes, we've gotten this snapback, little rally, and it was a big move, big rally, but honestly, to me, that's typical of bear market rallies. You're going to get quick, vicious, snapback type rallies because people are in this, people who have sold short end up covering in a panic type mode. The indicator I'm looking at today is the high-low, 52-week new highs minus new lows. So you can see how we got this very extreme sell-off back here in August 24th. Got another extreme sell-off to oversold right in here on the 29th of September, the end of the month. And now where are we? We're back here. It looks like we're trying to top a little bit, and we're just really in the neutral zone. We're just slightly above zero. The reading's 50 on Friday. But guess what? What was it? 48 on July 31st. And the reading was 76 on July 14th. So the other thing I just want to point out is this market has been weakening for quite a while. And, where was the highest peak that we've had of the last few years? This is May of 2013. Let me pull this, May 7th, 2013, right in here, May 8th, that early May 2013. And so if you go back and you look at the Russell 2000, what has it done since May of 2013? As that was the peak. So right in here is May. Let me get my crosshairs. Right in here is where the high-low index was peaking, and then the price just kept going up, and the high-low index did not confirm it whatsoever. And so now we're getting the breakdown. Okay, so that's what I think is going on, and with and it's happening with all of the indices also. Now, the high-low is on the New York Composite, but it's still an indication of what's going on in the broad market indices. Okay, I could have a high-low in the Russell, but I don't keep one on all of the individual indices. Actually, I'm not even sure if they do a high-low on the Russell. I know they do it on the Nasdaq. So the New York is the one that I kind of use as a benchmark to compare against. All right, let's take a look at, let's start off with the biotech. And so this is in a pretty strong downtrend. You can see how, with the break on August 24th, we bounced back up. We hit this resistance in here that had been support. We hit this resistance zone. Nothing's perfect, science. And let me zoom in a little bit. And so now you can see we're in this downtrend of lower lows, lower highs. We've come back down and kind of tested this low, but it still looks pretty negative to me. I mean, this was a pretty strong downdraft that we had a couple weeks ago, and it really hasn't resounded in terms of, rebounded strongly. And we got, look at this 21 coming down strong, the 55's coming down strong. I drew this little short-term trend line here. I'd be watching to see that it breaks this. It is going to make another strong leg down is my guess. And the next one we'll take a look at is oil. Oil had been consolidating sideways, in here in this little triangular type of pattern, and then it broke out. Now it looks like it wants to make, let me get rid of that. Let me go here. This looks like it wants to do kind of a zigzag pattern like this. And so what I was looking for was this leg to be about equal to this leg. And that's why I was targeting this up in here. Now, the other thing to look at, let me get rid of this, go back to the mouse. This helps me a little bit. Here's a gap right here, okay? And we get the 233-day moving average coming down. So this is a perfect target, but let me zoom in. You got to get through this resistance zone, okay? Previous high and a little short-term rally here. That's why I created a little resistance zone. It started to hit it on Thursday, kind of hit it on Friday. It's got to punch through this if it's going to continue to move on, but it sure looks like it's trying. So that's the way oil, and boy, gold, GLD, it is now continuing this move up. And my wave count on an Elliott wave basis is that I think the long-term correction is over. And let me zoom back out of this to show you what I'm talking about. And so here's the top all the way back up here in 2011, September 2011. So we're talking about 4 years ago. And this is a very complex corrective pattern. We got an A, B, C, W, we call it, because it's now doing, something, it's morphing into something else. And that's why these corrective patterns get very, very complex, and they can combine into multiple patterns. So we got a W, X, Y, okay? And so what am I looking for in a Y? I'm also looking for some kind of zigzag or some other kind of pattern. Well, we got a strong 5-wave down A, we got a triangular sideways pattern B, and then we got a descending or a diagonal, ending diagonal pattern in here for C. And so that's why I think we've got this whole thing is kind of completing, and this pattern down here looks like it is working out. And so 3 waves in here, A, B, C. C stretched, but so was A. So it was like A and C were similar, B and D were similar. We got the short E right in here like you expect, and now we look like we're trying to break out. If we go to a weekly chart, you'll see that, and again, let me zoom in a little bit. You can see the downtrend line connecting the pivot points right here and here is a key downtrend line that's kind of containing all of this retracement, okay? All of this corrective action in here. So now I am looking to see, and this was did this week, so up 1.88 on GLD this week. I am looking for this to continue pushing and break this downward trend line and head up. Now you're going to get resistance points along the way here and potentially here, but it sure looks like the whole corrective pattern may be over, and we're starting a move out, and we'll be watching for a 5-wave initial move is what I'll be looking for. And let me take it back to a daily. Yeah, I'm not sure that you're really getting it in here, but you could be 5 little waves getting a pull back, and we might be working again 5 waves, but again, 5 waves that become part of the first wave of another 5-wave sequence. So right now we'll just take it one step at a time, and the way it looks is that it's trying to push higher. All right, so that's it for gold. So gold pushing higher. Oil looks like it's trying to push higher. Biotech continuing to push lower. And we'll watch to see if we're getting a turn in the market. All right, that's it for the weekend. If you felt like this was helpful, this is an abbreviated version of what I give my insider members. Come on over, just click on this link on the video and go over to the join page, check it out. I've got a description of everything you get as an insider member, access to the trade ideas pages that I put out, and the videos, the technical analysis course that I have available that is free to my insider members, and I think you'll find it very interesting. Anyway, have a great rest of the weekend. I'm going to watch a football game. Talk to you later.